Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about AUDUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a very strong historical monthly support and demand area. From here, in fact, all this previous rejection to the upside was created. At the moment, the market is testing the exact same zone. So there is a good probability to see more institutional longing exactly inside of this zone from which this previous rejection to the upside, which could trigger more bullish continuation away from this area, respecting this historical monthly demand and support zone. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, here on the weekly time frame, things already get more interesting. What we can notice is that the market has been in a downtrend for quite some time, creating this series of weekly lower lows and lower highs. Now, at the moment, we can notice that in the creation of this rejection to the downside, the market has also printed this overextended M pattern. Now, in general, after the creation of an overextended M pattern, what you would expect is a rejection to the upside, for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. And if we drop down on the daily time frame, what we can see is that the market has yet to retrace to the level, and actually it is very overextended to the downside. Usually after such a rejection to the downside, where the market has essentially overreacted to some news, the market then usually follows with a correction. So there is a good probability to see more bullish price action being created away from this level, especially if we will see some institutional buying here at the bottom. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, we can see how slowly this is the first time that net positions are starting to increase again. Net positions were clearly decreasing. We went from minus 48k, minus 70k, minus 77k. Now they're starting to increase again. And there is a possibility, since we still don't have the data here from the bottom, that at this bottom institutions are now adding more longs, since already they were starting to shift back to the bullish side for AUDUSD. Now you might be asking yourself why this is AUDUSD and not only AUD, because all currencies on the spot are traded against the USD. So if institutions are increasing their net positions on the AUD, they're essentially longing AUDUSD. So if that is what is happening here at the bottom, we should also see that with the new report. And if institutions are adding longs here at the bottom, which is also historical monthly support and demand, there's an increased probability of seeing a potential rejection to the upside away from this level. So in a situation like this, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from that historical monthly support and demand zone. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.